One. All right. Hey, here we are again with another episode of Emerge the Real Estate Podcast. This is the space and the time where we talk about all things about real estate. We talk real estate finance, real estate acquisition. We even talk about the mindset of wealth. And today, I am so excited. I have a special guest, a good friend that I'm excited to introduce the Emerge audience to, because I believe every real estate team needs a person like the guest that I'm going to present to you guys today. And so today I have the pleasure of introducing and interviewing Mr. Phillip Washington with Stonehill Wealth Management. He is a young man that I have just grown fond of. We have established a friendship and a relationship, and actually, to just be honest, I would not be doing this podcast if it was not for Phillip constantly on me. Since the first time we met, he told me, he said, man, you need to do a podcast. And so from much prompting from him, here he is. I'm going to allow Phillip to introduce himself and tell us about Stonehill Wealth Management.
Well, I definitely appreciate you. Thanks for having me on, Lane. Appreciate the kind words. You know, it's funny. I was just telling my other friend in real. Matter of fact, I told both of them on the same day. I said, listen, I told both of you I'd do a podcast a long time ago, and you know who the only person listening to me was? Lean. I think the only one that listened to me. So I think you're gonna dominate, man, because you it's needed in real estate, and it's a useful thing, and it's just good for brain building too. So Stonehill Wealth Management, and basically what I do is I always say, okay, there's a financial advisor and there's a wealth manager. The financial advisor in general sells products for a company or companies, and they get paid money to sell products. Nothing wrong with that, model at all. I think it's just an older dying model. You saw that shade I did in the cool. I threw some shade in the cool. Wealth manager is we don't sell products. We give advice for a fee, and in general, we are the ones managing the money. So my compensation is structured that way. And so if we do better, our clients do better. And a lot of folks are moving towards wanting that type of objective advice, not tied to a product, not tied to a commission, and also tied to, hey, you know, if the client does better, then the advisor does better. And so you just see in every aspect of business, transparency and objectivity becoming a deal. And so that's why I'm getting a lot of clients from typical financial advisors that sell products and what I do. So that's Stonehill Wealth Management and what wealth management is.
All right, great. So I'm excited to be involved with you and to just pick your brain. I think you have a tremendous wealth of information, and so for this particular audience around real estate investors and even businesses that own real estate, what value can a wealth manager such as yourself, what kind of value can you bring to the real estate investor?
Yep. So I'm gonna give a general, right? So general wealth managers, like we're called on a lot by just different people with different investment ideas, whether it be a fund company, a real estate developer, a private equity company that says, hey, we know you work with people that have money, and we have some deals. You know, I want to let you know about it so you can let your clients know about it, or maybe even, have your firm on benefit of your clients invest in the deal. So that's wealth managers are what, that's all we're called on, because, we're fiduciaries and our clients look to us for advice for that kind of stuff. Me personally, Phillip Washington personally, at this stage, August 2020, I don't really get involved in that kind of stuff, only because there's so there's so much vetting that needs to be involved in that, and I tend to subscribe to, hey, you can be good at anything, but not everything, and so I don't want to be involved in vetting deals, specifically because also, and this is just my personal preference. I won't go into that. That's not important, but so that's in general. People who are in the real estate business may look for wealth managers because they're going to have access to money, right? Not me, but wealth managers might be a good source for you to find money for your deal. Secondarily, uh, I think everybody needs a good wealth manager for the same reason why you need a good CPA, right? So in general, the personality profile of a real estate entrepreneur is they're aggressive, they're optimistic, they're looking to hit some home runs, and in my line of work, doing this for 14 years, I can't tell you how many people I've met that have said, Phillip, I used to be worth X, right? Or I used to make X, right? And because it's not hard to make money, especially if the economy is flooded with money like it is right now. Like making money is not hard. Making it and keeping it is difficult. And so my job with the aggressive entrepreneur is to say, hey man, listen, I'm not going to make you the most money. Like, you're going to make yourself the most money in your aggressive endeavors. My job is just saying, hey man, carve out 10%, 15% of your income, send it to me, right, in the form of a 401k, an IRA, or a regular investment account, so that it's like your get rich slow plan and kind of like your safety net, right? People buy life insurance just in case. I'm like, just in case your balance sheet blows up because you're taking all this risk one day, you'll have like this backup money, right? It's like Allen Iverson. Allen Iverson, one of his advisors, took some of his money, put it somewhere, so when he went broke, he was able to access it uh, and have that money. So that's one thing. I'm like, I'm not saying that real estate folks are going to go broke, but nobody believes they will, right? But in that game, when you're dealing with leverage, it's always a possibility, no matter how smart you think you are relative to everybody else. For the simple reason that our whole economy is built on, way too much debt, right? Way too much debt, like just way too much debt, and so the game is going to stop, and when it stops, it's a musical chair. It doesn't matter how smart you are. Like, if you're left without a chair, like you're going down, like, period.
Right. And that is so. I guess that this is the whole reason why this Emerge podcast is in existence, is because for the exact reason that you said back in '08, like with a bunch of other folks, man, I was sitting there thinking about this right before we started this call. I remember the day that I looked at my financial statement and I had my assets and my liabilities. And for the first time, man, I stopped and looked at it. And my net worth at that time was like when you took the 2 million in assets I had, subtract the loans that I had against them, I had about a 1.5 million net worth. And it was like I started it, man, like with a 550 FICO score. And I was that aggressive entrepreneur that you talked about. But I'm saying all that to say this: I didn't have somebody like you on my team. And so when '08 came, I lost everything. And so I'm here today trying to help people not make the same mistakes that I made, because I didn't have a team in place. And so one of the things that I want to make sure that I bring to this audience is I want to bring qualified people that you need to have on your team. You need a wealth manager on your team. You need someone to help you carve out a section, because it's not it's not if things are going to change, it's when things are going to change. And man, if I had somebody like you on my team back then, I would have bounced back a little bit sooner. than what I did. So anyway, so yeah, so good. So that leads us then to the next question I have is, and I think I probably just answered this question, but I'm asking anyways. Why is it crucial to have someone like you on? Why should a real estate investor have you on their team? And I guess I'm going to aim this more specifically at you and not just a wealth manager. Why would somebody want Phillip Washington on their team?
Yep. Good question. I think it's more me personally. Like in my business and in my life, I've always been an entrepreneur, right? So I've never had a salary. Like I think the last job that I had a salary, I was making like $7.25 an hour at Best Buy or something like that. So I don't, I've been out of college for a long time. Like I've 14, 15 years creating my own income. And so, I always say like, nobody's more aggressive than me. Like I'm aggressive, you know what I mean? And I move cities, with a newborn, with no stability, made a bunch of money doing commission products. And then when I was finally making money, like switched to it on my own. Right. So I understand the mindset of somebody who fundamentally believes in himself and thinks they're smarter than everybody else. You know what I'm saying? Like, cause I'm only 36, you know what I'm saying? So I've been doing this when I'm still sort of a young punk, but I was really a young punk, you know what I'm saying, in my 20s, thinking I was smarter than everybody. But my point is, so I understand the psychology of whenever I'm talking to somebody and telling them that, I know they're thinking blah 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 whatever. You're talking about losers, Phillip. Okay, and I'm able to get to them. I'm like, listen, man, I've seen it. Like I've seen it. If I can take you to some of these people that I knew that used to make this money, they're smart people. You know what I'm saying? They're smarter. A lot of times smarter than like somebody like you. Like I don't think I'm smarter than you, and you've made $1 million. You know what I'm saying? But before I have. So your '08 scenario, your '08 situation wasn't because of intellect, right? You know what I'm saying? And so me being able to communicate that to people and say, no, I understand what you're thinking. Here's some real life examples. I'm not going to make more money than you. I'm not going to make more money than you. Like the reason why I say that kind of stuff too is because I know it resonates. You know what I'm saying? Like if I were saying, yeah, you're going to blow up, or yeah, I can make more money than what you're doing that wouldn't fly. You know what I'm saying? But it's understanding how to communicate to them and just saying, hey, listen, like, let me be your anchor. Let me be your conservative person. Because the other side of it, in reality, think about it. If you had somebody where you were like, all right, I'm giving them 10% of my money every single month. And I know this is the long term. So, tying in the boys, like we're building generational wealth, right? You could be more aggressive. You know what I'm saying? Like if you're being aggressive without that, I mean, you're being aggressive, but you're having to keep your feet on the gas and be aggressive, which is kind of counter. It's hard to do that. But if you got somebody saying, all right, I'm meeting with Phillip quarterly, I know he's going to like look out for the big risk for me. So I can like, what I have left, I could be super aggressive. You know what I'm saying? I think you'll end up being better at what you do if you have a wealth manager, right? So, that's why I think people need a wealth manager in general. And then for me, like, I get it. I understand it. I'm an entrepreneur. I know what you're going through. And I know how to arm wrestle the person when needed. Ego check them.
And man, I can just really attest to that, because as an entrepreneur, man, and being a risk taker, man, you feel like, man, you can just do anything, and it's like it's going to work, and it's almost like athletes, they fall into this trap of thinking that they're going to make what they make now forever, or it's going to forever increase. And I've been, if I'm not mistaken, I got in the financial services industry in 1982. This is probably my third cycle that I've seen, going into my fourth cycle. And those are usually 8 to 10 year cycles where the economy is just going good, and then it tanks, then it comes back up, it goes back down, and so and I fell into that belief, man. I'm gonna make this money forever, and that's just not the case. So it's good to have someone like you on the team. So with that being said, man, what kind of opportunities are you seeing right now?
Yeah, so I think so to give the frame, like economies have 4 cycles, like we have winter, summer, spring, and fall. We have 4 cycles, right? So we're in that cycle where it's a low growth cycle, like globally, and I'm talking globally, which means interest rates will very likely stay low for a while. um, and the government, like you know if you're a nerd like me, I read books on history, but I have one book that looks at 50 plus countries at different time frames, and it was like, all right, how did those countries solve this global growth problem, right? Because global growth is a problem because people are not making money, they get frustrated, politicians start fighting for control, people are angry, they're in the streets, like what's going on right now, right? You get
Mm-hmm.
all this conflict, and so politicians want to stay in power. So how do they end up solving it? Well, they start printing money, like every time. Like if you look at that book, 100% of the time, to get out of the situation, they printed money, right? Because printing money also makes their debts go down because they get to pay back their debts in smaller amounts of money, right? And that frees up extra money to invest. And it's a, I don't want to go complex, but the point is, so we're here, and so we know the government's going to print, and so whenever governments print money, what asset classes do well? Well, the dollar, the currency doesn't do well, the dollar in our instance, because you're creating more of it. You know what I'm saying? It's less valuable because there's more. And so people say, all right, I need to go into assets that do well when the dollar goes down. So so that's gold, right? We have Bitcoin, which is doing well because it's a digital form of gold, limited supply. Real estate, like real estate does well, but in real estate, you're going to want to be picky, right? So you want to look at the under leveraged parts of real estate. So different parts of commercial real estate, like retail, which is over leveraged, that's probably not going to do as well, right? Because that, for a whole lot of reasons, we use too much square foot, per sale relative to other countries, right? So that's probably going to go down for a while. But you have specifically in Texas, multifamily and single family that has a lot of upside, right? For the simple fact that a lot of folks are moving here. You look at our economy relative to New York and California, which we have more than what they have. As a matter of fact, we're attracting those businesses and those people to move here. So you have a lot of upside in the single and multifamily here in the U.S. And you have a lot of money. You know what I'm saying?
Right.
And the math still works, right? On cap rates, the math still works in this market, in that area. So I think it's a whole lot of opportunity in the multi and single family, right? And that's not something that Elaine told me, y'all, because that's what he does. I mean, that's just looking at economics and like facts. Like facts are, if you were to say, Phillip, where would you park your money and you think you're gonna get the best return over the next 10 years? It's like it's real estate, gold, Bitcoin, and then it's stocks of companies that are growing fast but have a strong balance sheet. Eventually emerging markets over that 10-year period will like reallocate into them on the liquid investment side, because those do well in those environments. And so we're slowly adding more money there. But for your audience who's maybe not investing in liquid stuff, right? Those are not recommendations. I don't know your situation, but those are my views on where I think a lot of opportunity is, just based on like what happens over and over and over again in history, right?
Right. Okay. All right. So I think so. So let's take a pause right here, real quick. Let's take a sponsorship pause. This Emerge Real Estate Podcast is brought to you by Victory Capital. And Victory Capital exists for one reason and one reason only, and that is to connect investors to capital to fund the projects that they are working on. We connect investors to capital. So this segment is sponsored by Victory Capital. You can get in touch with Victory Capital at www.victorycapital.com, and we can help you in any of your real estate financing needs. All right, man. So I think there's a need, though, to go back because you touched on it earlier. So you're not you don't necessarily put people in stocks, or you're not just primarily a stock. You don't sell stock. So kind of go back and kind of re-educate everyone again on what you do and what's the difference from you and say someone at Goldman Sachs or someone at Schwab or having an E-Trade account. I mean, what's the differences here?
Yep. So here it'll be easier to give an example. So when somebody sells their company for like $100 million, right? All of these early Facebook employees or whatever, when they come up on a big chunk of change, and I'm talking about hundreds of millions of dollars, and they're like, well, man, this is a lot of money. I don't have a clue how to manage it. So they go find with that amount of money, right, or even $1 billion, they'll go say, I need to go pay somebody a couple $100,000 a year, $300,000 a year, whatever the market calls for it, to be my chief investment officer, right? Be like, your job, and they might have multiple people on the team, but your job is to help me. And typically it's probably billionaires that have their team. But they're like, your job is to help me manage all of my investments based on my family's plans, right? Legacy plans. They don't got to worry about retirement because they're already retired, but plan out college education. We need to make enough money to make this money last for this, for generations. So they have a chief investment officer who builds the team, right? People that don't have $1 billion, you know what I'm saying? They can't pay somebody a couple $100,000 a year to do that for them. And so wealth managers said, okay, we're going to work with, millionaires that, you give us a few $1 million and we have the infrastructure to build your team. You know what I'm saying? Like, so we become your outsourced chief investment officer for maybe 200 families. That's how wealth managers got really started. So now with technology, it makes it easier now for like a wealth manager like me to say, all right, I have clients with millions, but I also have clients with $100,000, and technology allows me to serve those $100,000 a year clients efficiently, and I don't have to just do $1 million clients only. So a wealth manager is saying, you tell me your goals and your objectives, right? We're not limited. Like I don't have a restriction on what I can invest into the portfolio. We do stocks, we do bonds, we do ETFs. We can, we can do gold, right? We can do Bitcoin. We can, again, investment advisory firm. An investment advisory firm, which is the firm I own, is the firm that sets up hedge funds, right? That sets up private equity funds, that sets up real estate firms. An investment advisory firm is the management company of those types of products, right? So the company is not limited, right? I may put restrictions on what I do based on what I want to do, but we're looking at the whole picture for our clients. And the reason why I understand like the relevance of the economy and what's going on, because we own REITs, we own gold, we own stocks, right? The liquid version, not illiquid, liquid version, but I also have clients who are investing in real estate, and I may not put their money in deals for them, but they're like, hey, Phillip, what do you think about the economy? And how I'm thinking about doing this deal. What risk do I have economically? And I'll give them my opinion. They'll follow it or they don't follow it, but Yeah.
Okay. All right. Good deal. So, so we're going into the second half of my questions, and before I wrap up, how can someone get in contact with you? What are some ways that people can get in contact with Phillip if they want to interview you or check out and see if they want to add you to their team?
Best way is stonehillwealthmanagement.com. Stonehillwealthmanagement.com. It has all my contact info. You can book a meeting. It has my podcast, a link to it for Ask Phillip. It has a link to Stonehill 401k, our 401k services. It's stonehillwealthmanagement.com has all of that.
Okay. All right. And so I see that you have on your shirt. So why don't you tell us about the hashtag Ask Phillip podcast? What is that about?
Yes, sir. So it's similar to yours. It's just I put out weekly episodes on where I answer 5 to 6 questions about money,
Mm-hmm.
and then I'll also have a guest. Some episodes I don't have a guest, but lately I've had a guest every single week,
Mm-hmm.
and the guest typically is around like business or real estate or investing or raising money or law. But it's something to help people increase their financial knowledge.
Okay.
And I put it out weekly on Fridays, but it's on Spotify, Apple Podcasts, or on my website.
Okay. All right. Good deal. Good deal. So here's a very interesting question, man, that all of my guests have like said, man, this is a really good question. So I'm gonna start out with you. So Phillip, being your age now, you've been in the business 14 years. What would Phillip now tell Phillip 18, just graduated high school, going into college? What would you tell that Phillip?
You know what? I would tell them, like, just keep being you. Like
Okay.
you're like just keep doing what you're doing and being you, because I feel like and you know my personality, like I have to go through what I go through to know what I know now, right? So I don't know if I would want to tell myself too much that would change what I would do, because those were, you know, uh, good learning lessons. And I feel like where I aimed myself directionally at that age is where I ended up, right? Did I know exactly where I would be? No, but I said, look, earlier I knew I wanted to be in finance. I knew I wanted to own my own company. I knew I wanted to do investments, and so I just kind of went through the natural process of the learning and unlearning and working hard to do it. So I worked hard, maybe too hard, but sometimes. But how do you know if you're working too hard if until you do, right?
Right.
So I don't know. I would just be like, hey, just be you. Keep doing what you're doing. You're gonna end up where you want to end up.
Okay. All right. And you said something, and I'm not going to expound on it too much, but man, you just dropped a huge uh, nugget there when you said what you've learned and what you unlearned. And man, sometimes for some of us, man, that unlearning is more difficult than the learning, and that's huge. I could really dig into that, but some of the just ask you. So what's one thing that you had to unlearn?
I mean, this is a big one, and a more recent one.
Mm-hmm.
Yeah, I was talking to my friend this morning. We were working out, and it was unlearning. Like, so many times people spend too much time worrying about injustice and inequality and people's prejudices and all that
Mm-hmm.
kind of stuff. And I'm not belittling it. I'm not saying it's not wrong, but I'm saying that's been human nature forever, but it doesn't stop you from making money. Meaning, uh, uh, I'm trying to communicate fully what I'm saying, but I'm saying I had to unlearn being like, oh, this person is prejudiced, or this person is even racist per se. However, whatever, that's a big spectrum, right? But you would say they're an imperfect person. That's not gonna stop me from like um, getting where I want to go, even if it's through them. You know what I mean? Because at the end of the day, people in business are out to make money. You
Right.
know, and so they're not here for morals. They're not here. And what I'm not saying is do business with immoral people. I'm not saying that. What I'm saying is people are imperfect, and so to spend time worrying about their prejudices. I'm sure I had. Matter of fact, I know for a fact that people who poured into my life, like, um, like in a major way, like that's paid compound dividends. Man, I'm sure they said the N words a couple times back in the past. I'm pretty sure they believe in policies and things that are detrimental to my community, but they didn't see me. They didn't see me as, you know what I'm saying, as this black dude, which they knew I was black, but they were more like, hey man, like Phillip is like me. You know what I'm saying? Like we both are Christian, we both are about business. Phillip is like me, so I'm gonna pour into them because we had a relationship. You know what I'm saying? And so this may sound weird because I'm not excusing their behavior, but I'm saying, like, we live in an imperfect world, and getting stuck up on all that kind of stuff all the time, right? Is you have to unlearn, be like, man, I'm gonna like, there's a limit of what I'm gonna take. I'm not gonna take disrespect. I'm not gonna take, you know what I'm saying? I'm gonna call you on your stuff when I need to, but I'm also not gonna stop it. I'm not gonna not have a relationship with anybody who I'm looking at their imperfections, right? Because I got some, you know.
Right.
So
Wow. I hope I I wasn't trying to set you up, but man, I'm sitting here smiling. I got this big smile on my face because when you and I met, and to see where you are now, for you to even make that statement right there, man, I'm just so proud. I'm just so proud. I'm just so proud because, but anyway, I'm not. This is just gonna be a conversation between us. Okay?
But I'm still a work in progress on that. I'm just
I
saying
know. I know.
it's an active thing that I'm working on, because I've done it subconsciously before, you know. But you know how it is. You know how when you're naive and then you realize, and you're like, dang man, these people hurt my feelings because they, like, you know, because of whatever, and then you go back to being like, all right, forget about hurt feelings. I'm trying to make money.
Right. So I feel like a proud uncle right now. Like, that's my boy right there. That's my boy. But all right, so this is gonna be a conversation that we gonna have to continue because, man, I'm gonna say this publicly. I'm really proud of the transformation that you're making, and yeah. So anyway, next question. So next question. So I know that you are, like myself, a voracious reader. So what are you reading right now?
You know what? The last book that I listen to probably more books than I read, but you asked read. So I'm reading this book called The Daily Stoic. I'm actually physically reading that because it's daily. It's by Ryan Holiday, who his books are always really good, but he goes back and studies the secular version of Solomon's, right, and puts their wisdom into daily stuff. So I'm actively reading that. I listened to a book recently about the history of VC, venture capital, and that was like I love those books, like studying the history of, like, just money, right? So banking, real estate, VC, right? And so that was a really good book too.
Okay. Good deal. So man, again, it's time to start wrapping it up. So again, how can someone get in contact with you? And I'm going to make sure that I put all your contact information in the show notes. But how can someone get back in contact with you? And then what's some final thoughts that you want to leave our audience with?
StonehillWealthManagement.com. And the final thoughts is just keep on watching and sharing a leading show. Like, this is needed for the real estate industry. Just bringing people together, showcasing people. I think I'm excited to keep watching and listening to the podcast. So I appreciate you doing it and having me on.
All right, man. Well, thank you again. So if we can, I mean, not if we can. I hope you guys, I act like I'm at church. I was about to say, if we can we give Phillip a big hand clap of praise?
Doors of the church are open.
Right. But I'm just so excited to have Phillip on. As you guys see, Phillip is a wealth of knowledge, not just about stocks and bonds and mutual funds and gold and all that, but Phillip is a wealth of just business information and just overall knowledge. He's someone that I love to surround myself with, because one of the things that I do is I surround myself with younger men who are hungry, who are tenacious, who have this appetite to succeed, and so Phillip is a part of my inner circle, and so I wanted to introduce you guys to him today. So if you can reach out to Phillip at Stonehill Wealth, and also listen to his podcast, because his podcast is gold. It's good stuff. So anyway, thank you again for another episode of Emerge, the Real Estate Podcast. And again, this is brought to you by Victory Capital. All right. Thank you and have a great day.